What if you could access a low-interest line of credit without a credit check, a lengthy application, or even a fixed repayment schedule? That's the reality of M1 Borrow. As a long-term investor who's spent years building a portfolio on M1 Finance, I've found that this isn't just a margin loan for day traders, it's a sophisticated tool for managing liquidity. Here are the best ways I've personally used M1 Borrow to optimize my finances. 1. Refinancing high-interest debt. The most immediate win I found was using M1 Borrow to pay off high-interest liabilities. If you're carrying a balance on a credit card at 20% or even an auto loan at 7%, you can use M1 Borrow, which currently sits around 5.65%, or even lower if you've locked in a promotional rate, to wipe those out. You're essentially swapping bad debt for good debt that you can pay back on your own terms. 2. The buy the dip war chest. We've all seen the market take a sudden 5% or 10% hit and wished we had extra cash on the sidelines. I keep my M1 Borrow available specifically for these moments. By borrowing against my existing shares to buy more during a downturn, I'm applying leverage when valuations are lower. Important note, I never borrow the full 50% allowed. To sleep well at night and avoid a margin call, I personally stay under 15 to 20% of my total account value. 3. Funding a Roth IRA early. One strategy I've used is borrowing from my taxable brokerage to lump sum my $7,000 Roth IRA contribution on January 1st. Instead of waiting months to save up that cash, I get the money into the tax-advantaged account immediately to maximize time in the market. I then use my monthly paychecks to pay back the M1 Borrow balance over the next few months. 4. Avoiding capital gains taxes. This is a huge one for long-term investors. If I need $5,000 for a major purchase, like a wedding expense or a home repair, selling my stocks would trigger a taxable event. By using M1 Borrow instead, I get the cash I need without selling a single share. This keeps my compounding machine running and lets me avoid a tax bill at the end of the year. 5. Managing short-term cash flow. Think of M1 Borrow as a more flexible version of a HELOC. Because there is no fixed payment schedule, I use it to bridge the gap between large expenses and incoming revenue. As long as you maintain your minimum equity, usually 25% maintenance margin, you can let the interest accrue and pay it back when it's convenient for you. Summary of benefits feature M1 Borrow traditional loan credit check no yes approval time instant days / weeks repayment flexible fixed monthly tax impact none, no sale, potential capital gains. Using leverage is a double-edged sword, and it definitely increases your risk. But when used conservatively, it's a powerful way to stay invested while staying liquid. With that said, thanks for watching and until next time.